Hey everyone, this is Jose here. We're about to start the session in like 40 seconds, more or less. So as always, a quick sound check. If you hear my voice, it means that it's all good. We are ready to get started. Please let me know, sending a quick message on the comments box where you could say just a quick hello or simply say sound is okay. We're starting in just 20 seconds now. Hey, how are you, Dirk? Brian, Anthony, Orlando, how are you, my friends? Very good. Babu, fantastic. Okay, very good, everybody. Time to begin our session 2019. We are getting together today for longer term trading. So we'll be looking at higher time frames if you wish, okay? And my name, I haven't said it, is Jose Blasco. I'll be your guide. And before we start, we always have to go over a disclaimer. So let's do it. The following videos, clips, and demonstrations are for educational and instructional purposes only. Traditive provides these videos purely for the purpose of demonstrating a method of using the product. Users understand that all the content used in the video is purely for demonstration purposes only and is not a guide and does not provide any indication or prediction of actual results. As a user, you understand and agree that hypothetical results obtained through the demonstration do not indicate in any way the results you may receive on using our products. Good, so we have it. The session has been officially introduced. We have done everything needed, so we are in the same page and ready to start. How are you, Royce? How are you all? Good to see you all, my friends. So let's begin the day, okay? Let's begin the day. As always, we got 29 minutes from now until the market opens. The reason why I'm saying this is because I want to remind you that we're going to be planning on options trades, and the option chain with most platforms around the world typically resets around 10 minutes before the market open. So basically we got 20 minutes to do some preparation for the trades for today. Then we let the market open. And then we'll continue with preparation and execution. Okay, so the idea, in a perfect world, the best way on how to work as a team in the get-together sessions would be that you replicate what I'm doing. So I would be envisioning that you're using two computer screens. In one screen you see me, on the other screen you have your own trading platform. You have your UFOs or any other platform that you may use. And basically whatever I do, ideally you would want to replicate. So that way I can be your guide. Is that making sense? When it comes to executing, of course, you decide if you want to use paper money, real money, larger sizes or lesser sizes. All of this is obviously your decisions. Okay, but when it comes to planning the trades, the execution, the identification of the options that we're going to use, etc., etc., it will be ideal that you work with me in tandem, right? So we work as a team on doing all of this. Okay. Hey Lisa. Hey James. Very good. Yes, James, it's 9 p.m. from me as well. Very good. So anyway, so let's begin and quick look at the market. So market has been moving pretty aggressively to the upside in the past days. It seems that the market today will be opening, let's call it flat, okay, 0.07%, not too exciting, okay? When it comes to the VIX, so we get a little bit of a feel for what is probably happening in the options markets. So loading the VIX, so you can see the VIX has been dropping into the green UFO, so we expect the VIX to bounce out of that UFO, and it did, and not only that, it's continuing going up another 0.75%, which is very little for the VIX, okay? But in any case, we are in a pretty interesting condition for non-directional trading, because both in the S&P and the VIX, you can see red UFOs above, green UFOs below. In other words, the value of the options is likely going to remain in a range bound, while the value of most stocks in the S&P 500 index is going to do the same, because when we reach that UFO, probably price will go down, and when price comes to this UFO, price will likely go up. So in other words, both charts are suggesting for some, let's call it a little bit of a congestion time in front of us, okay? In most stocks, okay? Doesn't mean it needs to be all of them. I know some of you, I don't know if Devan is with us today, but I remember some of you were interested or intrigued by what's happening to Starbucks, okay? Starbucks is a trade that we plan on May 16. we are using an expiration date of July 19, okay? And since we entered this trade, Starbucks went against us, all this way. And since then, Starbucks has been moving up, and now we are actually in profit. So, and hopefully more to come, since Starbucks begins now the process of making all-time high. Now, in this moment in time, basically, we are more or less at the same price level where we entered the trade. We entered the trade that day. I don't remember exactly the price, but we are just slightly above current price. But how many days of time have passed? Well, 3 weeks, right? 3 weeks of time for Starbucks to recover from this initial drop. And you may think, oh, wait a minute, those options are killing me because of the time decay. Well, let me ask you out there, if you are in the Starbucks trade, please take a look at your account and tell me if you are in a profit or in a loss, okay? And you will see how you are in a profit. In other words, the time decay didn't really hurt us because we're using July 19 expiration, which is the key date, based on the rules, based on the TTT rule, as well as the rule that has to do with the earnings reports that are approaching, because July 19 now is 5 weeks away from now, something like that, okay? Yeah, so very good, Lisa. You're in the trade and some profit. So again, the time decay, many people utilizing options, and many times, just because of what's written in options books, which is the theory of options, many times they get too sensitive, if it's okay for me to use that word, when it comes to things such as time decay, where there are ways to mitigate that effect. As you can see in this trade, I think it's a great example, okay? But anyway, this is the market condition which we have. Of course, some stocks such as Starbucks are making all-time highs, so they may keep going and going. Other stocks, I would say the majority, probably are between UFOs, because you've seen both the VIX and the S&P between UFOs. Okay, so what are we gonna do? Well, we have executed our scans before the session started. We got 3 opportunities, potential opportunities for us to plan on longs, 2 opportunities, potential opportunities for us to plan on shorts. Those will be directional, where we would be using debit strategies, in other words, buying options, okay, paying for them. But then we also have multiple opportunities to exploit neutral trading, neutral with a little bit of a bias to the long side, neutral with a little bit of a bias to the short side, and also purely non-directional trades. Okay, so I'll start with the non-directionals today, because based on what I see in the marketplace, I mean, you could start anywhere, and I said sometime in the past that in the end, it's not only about what the market is doing, it's also about what do you need. Okay, and what do you need depends on what do you already have in your portfolio, right? Because today we are talking about longer term trading. We will conduct sessions in the future where we talk about portfolio management. And what we will learn in those sessions is that, you will never be long all your trades, or short all your trades, or debit all your trades, or credit all your trades. You would have a healthy diversification within your portfolio to produce a much better result. And therefore, there may be times where you end up too much long, okay, or let me rephrase that with a little bit better English, too long. In other words, you have too much deltas, okay, positive deltas, or you are too short. In other words, you have too many of the negative deltas, right? So depending on, or Vega or Theta, right, which are the options Greeks that we'll need to explore to a deeper level. So depending on what you need, you may start today looking at the directionally longs trades. Why? Because maybe your portfolio need longs. So that's what you need to look for, right? Maybe you start with the shorts. Why? Because your portfolio needs shorts. Or credits, because your portfolio needs credits. Or debits, because your portfolio needs debits, okay? Since we haven't covered anything about portfolio management yet, so I'm just gonna go with what makes the most sense given the market conditions, which, as I said before, we have red UFOs above the S&P, green UFOs below the S&P, and the VIX is also between UFOs. So the market is likely to remain range bound for a while for most stocks. Therefore, I will begin today with the non-directional trades, the purely non-directional, and then we'll move up through the neutral trades to get all the way to the directional trades, and that will do for the whole session for today. Okay, so let me see the questions here. Yes, Al. I understand. Some of you are joining us in the middle of a process, if you wish, isn't it? We started doing videos on YouTube in November last year. So there is a lot of material that would be very healthy for you to review. On the other hand, I totally understand that most of us are busy people, and asking you to go back in time to review all the videos done since November 14 is maybe a little bit too much to ask, isn't it? So, but it's okay. So I'll be refreshing myself. We'll do more sharpening sessions. We'll be re-putting all together. And I'll be producing, I said it before, diagrams and documents to support all the rules that we are putting together. Okay, so I will be producing all of that on time when it's the right time, and I will be making all of this available for all of you guys. Okay, so no worries about that. In the meantime, follow me. As I said, let's work in tandem. If you are taking a trade and you don't know everything about it because you have missed some of the sessions, then my recommendation is use paper money so you can get the experience. And if you make some mistakes applying the rules, because there are certain rules that you have missed because you didn't watch that particular video, then at least you don't hurt your account. But from a trading point of view, you are learning something and you are practicing something that will have an impact later on. Is that making sense? So let's keep it safe. Let's keep the practice on as well, of course, but let's keep it safe. Is that making sense? Just for you to understand a little bit more as well, when dealing with debit option strategies, such as buying a call, which is the trade that we did with Starbucks, there are two ways to deal with the trade, which is to use stops or to not to use stops. Given the market setup that Starbucks gave us that day, we had multiple green UFOs below price, and therefore we decided not to use stops, because something I said many times, so let me say it again because it's a good refresher to begin the session. One thing that I say many times is that stocks are a fragile instrument. Okay, and when I say fragile, I don't mean you should not trade them. They are amazing. I mean, what a beautiful thing that the US market got like close to 9,000 stocks that we could trade. That really allows us to find unique opportunities, okay? Because it's many, when talking about Forex or futures, they are still really powerful markets, and we love them as well, isn't it? But for the long-term trading, for building a portfolio, etc., they may not be as adequate or efficient as stocks because they are less, right? So when you trade currencies, if you are very heavy with the currencies, you may trade 30. If you trade futures and you are very heavy with the futures, you may trade 15 to 20 markets, and that's a lot already, right? So now with stocks, we got thousands. So really, it's a very interesting instrument, okay? But they are fragile. Why? Because, look at, again, this is a refresher, okay? What I'm about to show you, I shared that in the past, but it's good to know. So look at, for example, the euro, which gives us a 62% UFO performance stat. And if I was to compare this with the S&P, okay, that gives us 51%. How come the S&P is giving us so much less than the euro? Well, very simple. First of all, the S&P or stocks only trade 6.5 hours a day. So really what we have in the chart is representative of what that stock is, but is not representative of what's happening in the world, because it's not 24 hours. Second, okay, now if instead of the S&P, you look at specific stocks, for example, McDonald's, to pick one, okay? So what happens now? Again, you got a number, you got a figure here, 57%, which is also lesser compared to the figure that you have if you were to compare that with the euro. Why is that? One more time, because this is a product that only trades 6.5 hours a day, and on top of that, this product basically depends on what the S&P does, and the S&P is 500 stocks. So if you were to trade one, imagine how fragile that one stock is going to be, given the fact that the S&P, which is 500, is weaker than the euro. Is that making sense? Or if we were to look at futures markets such as the S&P futures instead of the S&P ETF, you would also see greater performance than 57. Okay, so long story short, stocks are fragile. Okay, so therefore, with the trade with Starbucks and many trades that we will do or that we have done, my recommendation has been to execute the trade with no stops. Now, this is not because you're hoping for the best. This is because when we plan the trade, we have been identifying multiple UFOs below price. So if the UFO that you use for the trade fails, there is another UFO below that is likely going to be responsible for turning that market around and bringing it to where you want it to go. Okay, and I'm not saying this is going to be a guaranteed way to profit, because of course we don't profit all the times, but this will increase your odds. Okay, it's quite frustrating to be stopped out of a trade and then just see the market to go all the way, because remember, the reason why we get into the trades, okay, is represented by the scans. The scans are looking for trends, for the strength of the trend. They are looking for options prices. So we are looking at many things that are in our favor, right? Getting out of the trade too soon, it's a shame, because then all these other factors that are built in the scan are likely to help the stock to in the end work. And if you got out, okay, then you just missed it. It's a little sad. Okay, now there are times where a stock will move against you and it will never come back. So how do we deal with that? Well, I also said in the past that we'll need to learn something that I call damage control mode, right? So there are certain things that you can do when it comes to when you buy a call. You can then butterfly it, for example. You can do things with the call to be in damage control mode when a market goes against you all the way, like it happened with some of the trades that we planned in the past, and it will happen again in the future, because that's trading, right? Because what happened in the past, the S&P that was in a beautiful uptrend went ahead and defined a very, pretty aggressive downtrend for a while. We don't know if it's over yet or what, but for a while it was a pretty aggressive downtrend. So some of the stocks that we planned in the past that were longs, okay, got hurt. Is this a big deal? No. Why? Because we're going to use damage control to control that and minimize the problem. Okay, minimize the problem probably means making a very small loss out of a bigger loss, or maybe end up with a small profit. Nothing amazing, but better than a loss, isn't it? But on top of that, remember, you're going to be doing all of this while you are dealing with a portfolio that you run at the same time. So while some of those long positions may have got hurt, some of the short positions are making money for you while you are managing the damage control of those trades that failed. Is that making sense? And in the end, all of this, it's kind of like a money machine producing results in a consistent manner non-stop. Is that making sense? But again, we need to be covering things one at a time. And as we keep growing with the use of the UFOs and your knowledge into how to trade, and again, that's a generic statement because I am fully aware that some of you are very experienced traders already, but for the ones that you are not that experienced, okay, there are many things that I need to expose you to as well, so you get to a point of mastery, if you wish, right? So you're gonna be like, a master trader, okay? That's the plan, okay? Anyway, so more questions, okay? So that was a long answer for your question, Al, but a good opportunity for me to rephrase important things. The MDT trade, Babu MDT, let me load MDT. Not sure if I still have the lines on the chart. Well, based on what we have here, we are still between the lines, right? We are still between the lines. So therefore, we are still okay, of course, because the market has been moving very, very aggressively, and the expiration date is June 21st, which is quite far away from now. Obviously, if you look at the real-time P&L of your trade, it's not gonna look pretty at this moment in time, okay? But again, you got until June 21st to end up having the price of this market to be somewhere where the circle is between the lines, okay? So this MDT may go up, hit the red UFO, and you're gonna be like, oh my God, I'm losing money, and then comes back in, and then time passes, now it's June 21st, and now next thing you know, you made all this profit, okay? So non-directional trade, another way to call it would be patient trading, right? In the sense that you gotta be patient, okay? And by the way, we'll also learn some damage control mode type of tweaks that you can do to this iron condor, because if you were to look at your put side, okay, and feel free to do so during the session, if you were to look at your put side, I'm pretty positive your put side is reporting a very nice profit, okay? So leaving the put side open and doing nothing with it may not be the best idea, okay? So there will be things that we'll need to learn on how to manage those condors, okay? But at the same time, keep in mind that non-directional trading is, another way to call it is patient trading, because you make money on time passing, so you just need to wait, okay? And while you wait, the stock will move, and as the stock moves, it will impact the P&L. But remember, the real-time P&L doesn't mean anything. The P&L that means something will be the P&L that you finally acquired on that June 21st date, okay? So good questions there. Maka, plans on covering currency options. It's a great idea, a great suggestion. I will not see us doing that anytime too soon, Maka, because there are other subjects that we need to cover sooner than that, based on your needs that I identify based on your questions, emails, etc., etc. So I'd be happy to talk about it, okay? But here's the other reason why I would not make it a priority, Maka, if you don't mind, which is that the majority of currency options that are available are not so liquid. And if you want to trade them in a way where you make decent results, most of it would be directional trading. And if you were to do directional trading with currency futures or currency spot, actually you get more leverage and more benefits. So there are applications for currency futures, but there are many limitations based on the liquidity. Okay, so that's why, if you wish, in the future we can talk about it. But there would be things that are going to be more profitable for you guys to exploit. Okay. If you are thinking of something concrete, Maka, maybe you can send us an email. Maybe we can give you a little bit of guidance there. Okay. Very good. Lisa, you're reviewing the sharpening sessions. Very good. Supply and demand trader. There are fantastic tutorials. Only 1 hour long, so well worth going through. Thanks for that. How are you, Bojan? Yeah. Orlando, the Starbucks trade was very unique in the sense that the call was purchased after Starbucks broke the red UFO above, which is not normally the case. Okay. Yeah, it's not normally the case, and we did it because of a reason, isn't it? We did it because in a case of a breakout, okay, that's a breakout when a market starts making all-time high, you could see that market never coming back to a green UFO until much higher, okay? And so that was the reason, okay? Unfortunately, as we took the trade with Starbucks, the whole S&P went down and dragging Starbucks together, right? So that was the issue. If you had waited for price to come back to the green UFO, Orlando, you would have actually got a better trade than the one I had, okay? But that day, it was a good idea, a good choice, okay, based on the trade setup to do a breakout trade in this case, because remember, and make sure you understand when I say breakout, I don't mean breakout from a traditional point of view. Remember, it's all about on-field orders, isn't it? So when the red UFO was traded through, what does that tell you? Well, it tells you that the on-field orders were taken out. And if sell on-field orders have been taken out, what does that mean? It means that buy on-field orders have been added. Because the only way to get rid of the sell on-field orders, okay, is to use buy orders. Is that making sense? So, again, in these very clear cases of all-time high type of breakouts, there are sometimes those crazy powerful breakouts where the market just moves 10% up, one shot, never came back. And, we simply didn't want to miss that, given the fact that the nearest green UFOs were quite close by. They were not too far away, okay? So it was a good reward to risk ratio, if you wish, okay? Supply and demand trader makes total sense. Looking forward to understanding your portfolio approach and putting it into practice. Yeah. Would you roll up the profitable put side on an Iron Condor or just close it? It depends on the UFOs, Dirk. So you will not do it just out of a method. You would do it based on the UFOs. In this case, obviously, new UFOs have formed. So this would allow you to roll. But it would depend on the premium. Okay, it would depend on the premium. And also, you could also add debits now, because the fact that MDT started moving higher probably impacted the value of those options to become less overpriced, and now they are more underpriced, and therefore you could buy spreads against the Condor, and you can do all sorts of things that we'll discuss in the future. Okay, again, Dirk, I know you are a very, very, very well versed options trader, so you know where I'm going with that. Okay, anyway, so very good. Very nice, guys. Okay, so we had a little chat at the beginning of the day, okay, which normally during the trading sessions I like to jump straight in the charts, but you guys had very good questions, and I believe it was worth to talk about it. Okay, so guys, let's look at non-directional trading. Okay, and what I want to do is look at briefing.com. So I got briefing.com here. The first thing I want to do is look at the key symbols that we see in here, and I want to filter out those symbols based on the earnings reports, because I don't want to use stocks that are about to report earnings. Okay, now XLV is an ETF, so I'll pass on that one. TXN, Texas Instruments. That is normally a pretty okay stock with premium. The next earnings is scheduled to be July 23. So guess what? Texas Instrument does qualify well as a stock that, based on the scanner, has decent level of premium in the options, but at the same time is a stock that has the earnings report quite far, which allow us to pick different expiration dates that are not necessarily too close. And then on top of that, TXN is a stock which is $100+ per share, meaning that this is let's call it an ideal price point, if you wish, in the sense that even if you pick options that are quite far, typically you get some premium, because options are a derivative instrument that derive their price from the underlying asset. If the underlying asset was to be $10 a share, the options are crazy low price. If the underlying is $100 per share, well, the options are going to be 10 times more. Is that making sense? Well, it's not exactly like that, but you get my point. So what do we have here? Well, first impression of Texas Instrument is not good, to be honest, with a 44% performance. Okay, so I'm gonna check on pre and post market to see what we got, and we got 47. Okay, and I'm not happy about this. Okay, I am just not happy about this. So we're gonna pass on Texas Instrument, because this is telling you that the way the institutions that are trading that stock, the way they deal with that stock, they just have this tendency to cancel their own field orders, and many of those UFOs end up not working as well as we want. Okay, so I mean, the algo is doing its job, and thanks to the algo doing its job, we have identified a little insight which is very useful, which is institutions tend to cancel their orders on Texas Instrument. Okay, so not ideal. Okay, if you pick another stock like McDonald's, for example, okay, we got 54%. We are above 50. Okay, so that gives you some edge. Okay, and remember, stocks are fragile. Okay, so you are not gonna get 70% with stocks. You will with futures, but not with stocks. But under 50%, then it's not useful. Okay, so we're gonna go for the next stock. Okay, and what is the next stock? So we got Rio. Okay, and Rio is not super liquid. Okay, but I'll be okay to take a look. Or actually, I'm just gonna change my mind because I got no information about earnings in here, and therefore I am a little blind with Rio, and I don't want to be blind. So I'm gonna go for the next one, which is Lulu. So Lulu has earnings reported on June 12th. That is not too good, because the next Friday would be June 14, okay? Unless we were to find a setup to use options that expire tomorrow on Lulu. If we got UFOs that are super close to each other, maybe we can do something using expiration dates for tomorrow. And that could be a nice, actually, we do have a nice setup with 2 UFOs above, 2 UFOs below, prices in the middle. I'm just wondering what the premium will be for Lulu. Let me take a look at pre and post market data. 53% is pre and post market. Regular session is giving me 57, so pre and post market session is more relevant for Lulu. Very interesting insight. Lulu will open up by 0.17%. Okay, so look, what I would like to set up is a non-directional trade with Lulu, where our bet would be that between today and tomorrow, Lulu would stay between the UFOs, which is 167 all the way to 179. Okay, that would be the bet. Okay, now of course, I would say that's a pretty high probability trade just by observing it visually. I guess you guys are with me. If you think about it, the size of this move, okay, from bottom to high of these candles, that's one day, right? So if you got another one like this, basically you're reaching the top, right? Or from here to the bottom, you're reaching the bottom. So it doesn't seem, visually speaking, if you wish, it doesn't seem that this trade will get stopped out in between today and tomorrow, which is great, okay? But at the same time, there is no free money in the market. So 2 minutes from now, the market will open. I will update the option chain and look at what is the premium that we get, because I am very concerned about being paid very little for the 179. Again, because it's very high probability, therefore the amount of money that you get paid by the market is typically less. Okay, so yeah, so I'll check that in 2 minutes or maybe 1 minute and a half, something like that. Okay, how is it going so far? Royce, what color blue and black means on stock scans? Yes, the blue means that this is a new symbol that was not there the last time you run the scan, where the black means that that symbol was already there the last time you run the scan. It's still valid, but last time you were given that symbol already. Okay, so the blue ones are new ones, the black ones are symbols that were already there. Perfect. Okay, so guys, 34 seconds to go. So I'm just gonna load the option chain here for Lulu and see how much we get paid. Okay, again, this is looking to me like a very high probability opportunity. Obviously, the first thought that triggers my mind is, am I gonna get paid enough? Because there is no free money, okay? But there are times where yes, we do, okay? And when that's the case, we are delighted to take the trade. So it's always worth it to check when the market gives you such a type of opportunities, okay? So I am loading the option chain on my other computer screen. You don't see it right now, but I'm just gonna bring it into the main computer screen in just a sec. Here we go. So here is the option chain for Lulu. June 7 is right here. Okay, and the market, has the market open already? Yes. So the market has opened already, and we don't have 179s, we have the 180, and as you can see, the 180 pays you 9 cents. And the 167s pay you 34. Okay, so it's very little amount of premium. Again, as the market opens, all those figures will kind of stabilize. Okay, so we may get a little more than what is available here, but still it's gonna be too little because we have a rule in it, and what our rule suggests is that we always want to get a super bare minimum of 35, where ideally we're shooting for 35. Okay, so yeah, obviously 9 is not meeting that rule at all. Okay, so no trade for Lulu, and therefore we're gonna continue our research for market opportunities. AGN, so let's take a look at that stock. AGN, this is a biotech company, or pharmaceutical I should say, and normally they have a little bit of extra premium built in because of the nature of those stocks. Earnings are on the 25, that's okay. The price of the stock is also 100 plus, okay? My concern, before I look deeper into the chart, my concern here would be about options liquidity. Okay, so 125 is the current value. Yeah, we got like 40 cents of spread here on the front wick. If I use the next expiration date, we have like, yeah, crazy spread. Okay, so yeah, we're not gonna use Allergan and CNC. Okay, that's another stock that I'm not so sure about liquidity. Okay, so if it doesn't work, then we'll move into the neutrals. Okay, so earnings report on the 23, that's good. Liquidity for that stock, if we look at the current price, 225 to 45, well, that's not so bad. That is not so bad. It's better than what I thought. Okay, so let's go ahead and give an opportunity to CNC, Centen Corporation. So we got a probability of 52.96% using regular session hour data. Using pre and post market, the 52 becomes 42. So it is obvious for that stock that the institution don't leave their pre and post market orders in the system, they cancel them. So we're gonna rely on what's more reliable, okay? If we were to do this trade and I was to measure the distance from here to those two red UFOs, and I was to project this to the bottom, okay, basically I am more or less equal distance from that price of 58.84 and 49.50. 43. So I could certainly set up a non-directional trade. I mean, certainly as long as I got premium enough, of course. But we could set up a non-directional trade where we would bet on a trade where the expectation would be to have that stock to remain between the two blue lines, which is, let's call it 59 above and 49 below. So it's a $10 range for a $50 stock. That should be of a very, very high probability. We got up to July 23 expiration date, okay? So all of this is looking good, but again, the fact that the range is very, very wide, which increases the probability, also tells you that you're gonna get paid less, okay? So let's take a look and see if the amount of premium that we collect justifies the trade, and if it doesn't, we'll move into the next type of trade. So loading the option chain, we will begin with July 14 expiration. Okay, actually we don't. CNC only have monthly expirations, so we're gonna have to be using July 23rd. And if I was to look at the 60s, okay, the 60s, because there is no 59, that would pay me 20. That's not enough. And if I look at I will want the 49s, but anyway, that would pay me 25 to 40. That's 33 as the midpoint. So yeah, it's not enough. It's not enough premium. And again, it's because the range is very wide, but you know what is where the UFOs are, okay? So just watch it, guys, because maybe tomorrow or the day after, what may happen to Centene is that it creates, you know, let me draw this correctly. It creates a UFO here, and then price moves, okay? And then maybe even another UFO here, and then price moves, and now price is more or less here, and now you can actually go ahead and do a range between 53.75 and 59, and now you have a much narrower range where you have two UFOs below, two UFOs above, and now the trade makes sense, okay? And this could very easily happen. It's just something that you'll need to watch, because if that happens, probably it's between today, tomorrow, maybe Monday, okay? And we will not be back together until next Thursday, okay? So that's why I'm giving you those instructions. Good, so we're about to move into neutral. Before I do, guys, give me a little bit of feedback. How is it going so far? You guys were very animated at the beginning of the session with questions, but then you got very, very silent. So I just wanna make sure everybody's with me on planning those trades. Yeah, dear, we could certainly go for July, and that would probably give enough premium, but then I would see that range as not wide enough to survive the time risk all the way to July. Okay, so, and again, my statement here is a little subjective, which I really dislike, because I'm just telling you my visual impression of the stock, okay? When we get deeper, we have never done specific sessions on iron condors, okay? We have done sessions on credit spreads, but not iron condors, isn't it? And when we do, we'll have to learn a method to calculate probabilities of staying in a range versus probabilities of having time to be too much for you to stay in the range. So we'll learn a method on how to do that, okay? And the subjective statement I just gave you will become then objective, okay? Good. Yes. Focus is intense. I love it. Yes. Al, on CNC or other stock, do you ever look at the daily time frame? Not. You could, but I don't, because the idea is to use the shorter expiration date as possible, because time decay works the fastest with the lowest expiration dates. So normally we like 1, 2, maybe 3 weeks. Okay, that's the most. So looking at daily time frame and asking for 2 or 3 UFOs above and 2 or 3 UFOs below, typically we produce ranges which are really, really wide, and then it kind of defeats the purpose of time decay. Those trades may end up working very well, but the amount of money you make with them, given the time that you had to wait for you to collect that profit, make the trade not justifiable, okay? So that's why. Anyway, what else do we have? Amgen. So let's take a look at Amgen. Now we are looking at neutral shorts. Okay, so changing dynamic. We are not doing non-directional. We are now doing neutral trades. We start with the shorts, okay? So that means that we're gonna be relying, and if we add pre-post market, it becomes 49. So with Amgen, regular session is better. And when looking at the setup, we can totally see that we got multiple UFOs stacked upon each other. So when it comes to earnings report, I should have looked at that before. The date for earnings is July 25. So I could certainly go out in time until finding the option I need. Okay, so I'm gonna load the option chain. Okay, so loading the option chain for Amgen. Again, good news with Amgen, it's a $175 per share stock. So, I mean, I would love it if I could sell the 190s, okay? That would be very, very nice if the 190s were to provide premium enough for Amgen using June 14 expiration. Let's take a look at the 190s, and the 190s provide 9 cents, okay? So those are not good enough. So what about using the 21st? Okay, and the 21st would provide, yeah, not enough. Okay, so what if we do 185? So the 185 is fine, but yeah, I'm not super comfortable about this. I am not super comfortable about this, and the reason why is because it's looking like the S&P is beginning a new uptrend, and therefore that's gonna drag multiple stocks up. And it's also looking like Amgen, you know, after all these price actions going down, right, and a pretty long period of congestion, it's kind of breaking out of this congestion place, and therefore maybe not, beginning the process of defining an uptrend. So I'm not concerned about the uptrend because, you know, my UFOs are still likely going to produce bounces, even if it's an uptrend, right? And, you know, if I sell my options all the way here, so I may be fine. But if I sell my options here, okay, I may get there too soon, assuming Amgen is creating an uptrend. Okay, so the trade setup is not as convenient as I would like it for a neutral trade, and therefore I'll look at a APA. And the setup chart is still loading, PD for pending data, so we are just waiting. Okay, almost there, I guess. Here we go. So we have 52% pre and post market would be 45. Okay, so we're gonna use regular session hours to plan this trade, and we do have a similar setup compared to what we have with Amgen, but it's different in the sense that all the time that stock spent down here is much lesser. So it's much more like a V type of turning point instead of a kind of like up and down, up and down, up and down, and then breakout. Okay, so this may simply be a correction in a downtrend instead of a change of trend. And in any case, it's going to be very difficult for that stock to overcome the huge amount of on-field orders, UFOs, you know, almost overlapping each other in that region from 29 to 33. Okay, so I would love to find a way to sell the 33s. Okay, again, that's a pretty cheap stock. Okay, and you know what I'm thinking. It's very likely that the level of premium I will get may not be good enough. If I point at the 33s, I am getting 11. Okay, so what if instead of going all the way to the 33, I was going to go to the 31 something. So 31.5 pays me 21, still not enough. Okay, so yeah, what's happening in the VIX today? So the VIX is going up by 1%, so very tiny move on the VIX, very tiny move. Yeah, and the S&P is, yeah, still going up. So yeah, I guess that certain stocks are quite calm at this moment in time. Okay, so based on what I'm seeing, kind of the same thing may happen with the neutral longs. I'm gonna pass on the neutral shorts. Okay, I'm gonna pass on the neutral shorts because of what I'm seeing. The market is going up. You know, the calls are becoming higher value because the market went up, but also they are shrinking because people get calmer, isn't it? So there is, you know, there is less overpriced built in those options. So I'm gonna look at the neutral long, and I'm just gonna look at the most liquid stocks. For example, PayPal. Normally that one is just gonna reset it to make sure everything will be smooth while we wait for the pending data. Okay. Okay. Oh, this is loading on my other computer screen, so I'm gonna move it right now. So PayPal is almost loaded, almost there. Here we go. PYPL. Yeah, and we do have during regular hour session, and they tend to stay more in the pre and post market. Okay, so you never know, and that's why it's so important to run this process to get a little insight, okay, from those markets. Expecting the market not to come here anytime soon. My question is, we get paid for the one-off. How can that be? Got it. It didn't load. Okay, it's taking longer than normal. This is not. Okay, now we did. Good. So 103s. How much I get paid for the 103? For the 103, I get paid 20. Okay, that's not enough. But what if I was to use the 21st of June? Now the 103 would pay me 48. Okay, now the 103 would pay me 48. So we may have a trade now. Okay, we may have a trade on that particular stock. Okay, so let's take a look. We are planning on a credit spread where we would be selling the 103 put, and below the 103 put we'll be buying the 102 put. Okay, that would be the plan for this trade. Okay, now if we do that, we said that we will need to do it using the June 21st 2019 expiration date, because June 14 was not good enough. We also said it's all good to do it that way because earnings are not happening until July 24, so we are fine. All of this is in our favor, but now the question is, will I have an opportunity to take this trade, yes or no? And this I will know as I use the rules and a calculator, because first of all, the rule suggests that when I sell options, I need a bare minimum of 25, ideally 35. Well, we saw before that the 103 is providing me with 48 as a midpoint. That's very good. And by the way, love PayPal liquidity. Okay, super narrow spreads. That's beautiful. So that's a good starting point. Okay, so I'm gonna get my calculator here. Okay, so. Okay, calculator, here we go. So we know that we're gonna collect 48 from the option that we sell, okay? But then if we buy the 102, okay, if we buy the 102 against the one we sold, which is the 103, right? So apart from collecting 48, I will now need to spend 39 cents, okay? 39 cents to be able to be in the trade. Okay, well actually now it's 47 and 37. So again, the difference is 10 cents, okay? Now, what's the issue here? Well, the issue is that you're not supposed to do that, okay? You're not supposed to do that because what the rule suggests as well is that you need to take the difference between the strikes, okay, which is 103 and 102, right? So the difference between strikes, 103 minus 102, that is 1. And what you want is you want to collect at least 15% of that difference, which is 15 cents, okay? And what's the issue? Well, the issue is that we just saw that if I sell the option at 45 and I have to pay 36, so I got 9 cents where what I need is 15, okay? So in other words, it's not good enough, okay? It is not good enough. So the only choice I would have then is to go ahead and use June 28, but I'm not gonna do it, okay? And here's why. I mean, there are two reasons. Number one, because that would be too far as an expiration date given the distance with the UFO. So I may plan it differently. But also I want you to be aware that it's giving you less premium as well, 28% instead of 33. Okay, so the June 21st was actually the ideal expiration date. Unfortunately, we didn't have the premium we wanted, so we cannot make it up. We need to be realistic, and when we have to say no, we have to say no. That's it. But at the same time, I wanted to point at those figures because that's always more disadvantageous. Okay, so what if instead of using this one here, what if we were to use the next UFO located at 100, and we were to sell 100, okay, and then we were to do 99, right? This would be using June 28 expiration date. So what would happen if you do that? Okay, that's another way on how to look at this trade using June 28. Well, if I do 100, okay, this is gonna pay me 46. Okay, it's going to pay me 46. And then to buy 99, I would spend 39. So how much is that? Well, 46 minus 39, okay, that's 7 cents. Again, problem, we are not getting the 15 cents we need. Okay, what if I do 98? Okay, well, if I do 98, it's 42 minus 35. I'm being paid the same 7 cents. Now I got double the risk. From 100 to 98 is 2, right? So yeah, unfortunately, we are not finding a way to get the parameters of the trade we need, and therefore we are just gonna be disciplined. And I know it's nicer when, in 20 seconds we found the trade compared to 20 minutes and we said no to everything. I know it's nicer, but at the same time, our job is to be professional and disciplined, and we can only trade what the market gives us. Okay, so we gotta respect that fact. What else do we have? Let me see. PG could be a candidate. Yeah, so I'll check PG, and if we got nothing with PG, then we'll look at directional trades. Oh, okay, guys. So I hear that there is a problem with the connection. Got it. Actually, I have done a change of settings on my side, attempting for a better continuity on the connection. So I guess that what I did didn't work the way I expected. Okay, so since the session is almost over, guys, if that's okay, we just keep going. But what I'll do, I appreciate you letting me know, because I will change those settings to a different position for the next session. Okay, so what do we have with PG? So PG, July 30, so again, earnings with pre and post market data. So yeah, so we have a potential opportunity here to plan on a trade. Okay, so I mean, in a perfect world, I would love to go all the way to like 101, but it all depends on the premiums I get as well for PG. So let's check what PG is giving us. So here is PG. If we look at the 14, actually let me start with the 7. So yeah, so like for example, 104 is giving me 4 cents. Okay, so I'm not gonna do 104. What if I do 14? So 14, I could do 104, gives me 24. What if I do 21st? If I do 21st, can I do 101? I got 19. Yes, I cannot. So what about I do 102? Yes, I will get my 25, but then 25 and 19, that is not going to be 15 cents. Okay, so I am not getting premium, guys. Okay, I think that premiums are shrinking across the board. Yeah, so no credit trades for us, guys. So let's jump into the world of debit trades. Okay, and we're gonna look at DD, Momo, APC, AXP, and RTH. Okay, so I'll start with American Express and see what we have. By the way, let me tell you that we have an exciting weekend in front of us. Okay, we have 2 sharpening sessions this weekend. You guys were aware of that? The way I was just planning to do, but those are gonna be for intraday trading. Okay, guys, so it's gonna be a very interesting approach. It's gonna be a special session. We'll have a special guest. Okay, some of you may know him. Okay, so we'll have a very fun session on Saturday, and then Sunday we'll get back together again for sharpening. Okay, 9 a.m. in both cases, Saturday and Sunday, 9 a.m. Eastern time, always using New York time as a reference. And on Sunday, what we'll do is we'll talk about long-term trading. Okay, so what does that mean? It means that today is the last time that I will be planning a trade looking at one chart only when it comes to directional trading. The ones of you that are joining us for the intraday trading sessions, for the short-term trading sessions that we do normally on Tuesdays, you've seen that we came up with a pretty interesting methodology where we use the DMI, we use a moving average, we look at the trend, we look at what side of the market we should be in, we look at multiple things, we use the edge timeframes. So we're gonna be learning how to do that for the longer time frame, for the longer term trades. And we'll apply it to all markets, including stocks, ETFs, apart from, of course, currencies and futures too, right? And then we'll add options to it. So, in other words, my precision timing the markets in the longer term trading sessions when we do directional trades with debit strategies, it's about to get better, okay? Because I am about to add more tools to add with the timing, because again, options are great, but if you buy them at the wrong time, what happens? You lose, right? So we're gonna be able to do this much better, okay? Babu, the portfolio session will be later on, okay? Because we'll need the whole 2 hours on Sunday to cover the long-term subject, okay? So portfolio stuff will come later. Yeah, I will not be mad. It will not be mad. Let me keep it as a surprise, if that's okay. I like surprises. Anyway, so American Express. So what do we have? Okay, so based on the scanner, that stock is in an uptrend. When looking at the daily time frame, clearly that's another stock that is positioning itself for a very, very powerful trade that could begin making all-time highs and keep going. Okay, and again, those all-time high trades could be very, 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 very powerful. Okay, when a market makes all-time high, many times it just keeps going, and when it keeps going, normally it's not a joke. Okay, so again, I'm not saying that you have to get into this trade. I'm just saying that if your portfolio needs longs, those trades that if they work, they end up pushing very hard, very far, those trades are ideal. That's what I'm saying. Okay, it's in the end, it's all about what your portfolio needs. Okay, if you already have multiple trades where you're long, well, maybe you don't want to take it because that would increase too much your risk. Is that making sense? But if you are looking for longs, then this could be a good opportunity. Okay, so what's the good news here? Well, the good news is that there is no red UFO. Okay, there is no red UFO. Okay, yeah, I'm sure if I was to activate the show hit UFOs, there is something red there, but it's minor, it's low probability. So price is gonna likely go through and keep going. Okay. Of course, depending on the S&P because it's a stock. So knowing that we have this type of market setup, I'm going to be looking at the lower time frames. Okay, I'm going to be looking at the lower time frames. In this case, 60-minute time frame. Pre and post market was 43. Regular session is 49. I mean, I'm not super excited about 49. Okay. But it was 51 on the daily, and again, we are relying on a larger trend. We just want to try to find out the ideal entry point, knowing that there is no ideal entry point with stocks because stocks are fragile. They depend on the S&P. So American Express will tend to go higher if the S&P goes higher. Okay, so there is no super ideal entry point, but basically you have two choices, which is if American Express goes up and gets rid of the red UFO, this could be your entry one. Okay, that could be your entry one, exactly how we did it with Starbucks. Okay, a better and more conservative approach would be to wait for that stock to drop into the green UFO, and now you enter, okay, expecting the stock to keep going higher, okay? That would be a much better approach, because now you would be buying at 117 instead of buying at 120. Okay, so you would save yourself $3 of risk, which is greatly appreciated, but at the same time, those trades, you may miss them, right? So basically you have to observe this, okay? Two things may happen. It goes up, okay? And normally if it goes up, it's gonna give you some UFO forming somewhere here, okay? And the moment it breaks up, okay, it gets rid of the rate you will want to enter, knowing that you have UFOs to support yourself, okay? So that's one option. The other option is that it doesn't go up, okay? It goes down, and if it goes down, the moment it comes to the green UFO, that will be your time to enter, and then you go up, right? So that would be the plan. In both cases, so that would be the plan for the timing. In both cases, the idea for this trade would be to purchase a call, okay? The idea would be to buy a call. That's it. Okay, we're just gonna buy a call. We're not gonna do a debit spread. We're not gonna do anything fancy. We will just buy a call. Just like with Starbucks, this market has potential to go very, very, very far. Why? Because it's a breakout of an all-time high. Again, it's all depending on what the broad markets will do. But if the markets go, American Express should go more, right? So you don't want to cap your profit by selling a call against the call you buy. So in this case, this is one example of where we go, just a naked call, okay? We just buy a naked call. So we cannot calculate the time to target. Normally this would be the time where we calculate the TTT, right? We cannot do that. Why? Because there is no target. We will not use a target for this trade. What we will do is keep trailing the stop, following whatever green UFOs that form on the way up. We will just keep moving stop up until one day we get stopped out. And then whatever profit we collected, we'll thank the market for that. If the breakout is intense and it pushes very, very strong, you are likely to collect a very decent result, okay? Now, because we don't know the time to target, okay, the only reference we have to purchase the option is the earnings date. Why? Because you know that we want to mitigate the effect of time decay, and therefore, instead of using a fixed amount of days as the expiration date, we're going to use an expiration date around July 17, no matter how many days are available to that date. Okay, so July 17 basically will bring us up to July 19. That's 43 days from now. So basically, we are giving this trade 43 days to make us happy. Okay, we're gonna buy a call. What was that again? That was July something. Yeah, July 19. Here we go. So we're gonna give this trade 43 days to make us happy by using 19 July 2019 expiration date. Okay. And the reason why, again, is because this is around earnings. So we will get out before earnings, okay? We will get out before earnings and collect the profits, whatever the profits were. It's either you keep trailing stop, or when you get to the earnings date, before earnings, you get out, okay? But thanks to using the expiration date that is lining up with earnings, we will mitigate a lot of the time decay problem that happens when you buy a call, okay? Just like it happened with Starbucks. Okay, as you guys have seen, great example to see together. Now, when it comes to buying an option, which one are we gonna buy? The current price is 118, right? The breakout was around 120, okay? So which one would you like to buy? Well, the problem is that in this particular stock, notice how the strike price increments in July are $5 at the time. You go from 120 to 125 to 115, right? So it seems logical to use the 120. Okay. Again, I said that in some sessions some time ago that we will also learn a method using a search tool where we will input certain parameters, okay, and then click search, okay, and have TradeStation pick the strategy for us automatically on which option to buy. Okay. So we'll learn to do that. Okay. But for now, I'm just doing it manually, and therefore I'm going to suggest to buy the 120 call. Okay, that's gonna be the trade to be executed. Okay, so I'm just gonna click buy, and I'm gonna place the order in the system. Feel free to replicate what I'm doing if you feel like doing it. Okay, and again, repeating myself one more time, you decide the size, and you decide if it's real money or paper money. But in my case, okay, I'm gonna buy this thing with a market price with an activation rule, because if I buy it with a market price now, I will get filled now. And I don't want to get filled now. I want to get filled if it breaks the red UFO or if it comes to the green UFO below. Okay, so the green UFO below is 117. Okay, 117 is the green UFO below. So what I'm going to do is click activation rule, click on activation rule, click on the little button with the 3 dots, and then I'm going to have 2 rules based on price for AXP. Okay, and because it's 2, I'm going to click on add 2, 1 and 2. And now I'm going to say, okay, if AXP goes above 120.12, or make sure you change the or AXP goes down to 117, okay, so activate this order if American Express reaches 120.12 or American Express reaches 117. Now make sure you don't leave the or as and, because that condition will never be met. You cannot be above 120 and below 117. So this order will never execute no matter what American Express does. Okay, so make it or. So now if American Express reaches 120 or American Express reaches 117, then I will buy to open 120 call on American Express, the one that expired on July 19, 2019. And with all this clear, I'm just gonna place order and click yes, 1, 2, 3. And now in the bottom part of my screen, you can see it says received. So the order is there. Notice it doesn't say filled because my conditions are not met, okay? But on the day in which I draw the vertical line, we had a trade in place, okay, to take care of this opportunity with American Express, which is a directional low time. It is also the time to conclude the session. Super quick, I would like to remind you of 2 things before we go. Number 1, if you use the web tradingview.com, okay, you have a search box in the middle. You click on the name and automatically you will be able to see our main screen, right? So once you're here, you can like us, follow us, okay? That little reminder for you guys so we can be better connected. And the other thing I wanted to remind you as well is on YouTube, when you connect with our channel, it's advisable for you to be subscribed and most importantly, click on the little bell. So that way, when we add new videos, you get a notification, you get a reminder, okay? And also, if you enjoyed today's session, it would be nice of you to also give us a thumb up, okay? But anyway, having said all that, we have a trade in with American Express. The order is in the system. Hopefully, we'll get filled either by having American Express going up or going down, and we'll be talking about it probably into next week, okay? Now, what could happen, because anything could happen too, is that American Express remains in a very tight range for a while, and now next thing you know, 1 month of time has passed and nothing has happened. So probably we would end up canceling the order because remember, you want to profit from the breakout and therefore you want to give yourself time. We gave ourselves 43 days for this to happen, but if the trade didn't happen in 20 days from now, you would be left with only 20 days, okay? Notice what happened to the Starbucks trade. It went against us, and because we got plenty of time on the option we bought, we are now able to enjoy the fact that Starbucks is back in business, okay? So you want to give yourself time, okay? And therefore, we'll be monitoring this trade, and we'll talk more about it in the following sessions, guys. Super pleasure again. Hey, Jose, do you ever use single trade TIG with NVO? No, I don't. I think, it could be useful because, you know, sometimes the trading platform or a network interruption could produce a bad tick. Okay, so this could happen, and it could be useful to have instead of single, have double trade tick, and that way, if you had a bad tick, you know, you were not caught by that. But the reality is that this happens almost never, and on top of that, you know, when a market goes so close to where you want it to be to either enter or exit, you just want to be executed, right? No matter if it's a stop or it's an entry order. So, you know, I would just keep it very simple and not make it complicated. Supply and demand trader, am I right that our homework is to monitor the CNC error and condor? Yes, and then execute it if it shows enough premium. Yes, you're correct. You're absolutely correct. Good one. This is good. We need to learn to fish using AutoUFOs for our fishing line and not just to follow your trades. That's exactly the goal, and that's why in these sessions, you know, I could, you know, just come up with the trades ready to be executed, but instead, you know, I think it's very healthy that we go over the whole thinking process so you learn how to fish. Is that making sense? And I'm sure that as we add more sessions, and you know, sometimes maybe we'll do 20-minute sessions where the trades are already ready, and then we'll do 1-hour sessions where we find the trades together. Or we'll do more diverse stuff. Okay, so that way that works better for everybody. But again, the purpose of these sessions is exactly what you define supply and demand trader. Thank you so much for that. Mario, I answered that question already. Babu, shall we have list of usual suspects for debit, credit, options trades on a daily basis? That will not be useful, Babu, because this changes through time. So a stock, for example, American Express, which is a good candidate for you to buy options, 1 week from now, maybe it did the breakout and now it's going to the moon, and now everybody wants to buy, and therefore the prices of the options became so high that you would never want to buy options on American Express. So having it on a static list will not be useful. It's more useful to use the scanners, because now you get a dynamic list which is adapted to the real-time market conditions. Okay, so good thought, and I totally understand where you're coming from. Okay. Calc order, what calibration number is yours set at? I am trying to duplicate what your indicator shows. Yes, so you can see on the upper part of my screen, right here, it says 0.618. Okay, so this is the calibration setting that I am using in my case, Kyle. Very good, everybody, guys. So fantastic, a pleasure to be your guide during this 1 hour. I will see you on Saturday. I will see you on Sunday. Remember, we have a special session on Saturday. Make sure you don't miss it, okay? And we have a very relevant and very important session on Sunday. So counting on seeing you during both of the days, guys. You guys take care and keep up the good work, guys. Discipline is key. So keep up the good work. Follow the rules. And let's all be professional as a group and as a team, guys, because we're killing it. Okay, so let's keep up the good work. Take care, guys. Bye-bye.